So if you've watched any of my videos, you know I'm all about breaking stigmas in the mortgage world. Today we're going to talk about one that maybe not as widely known, but if you have good credit, you still have to go through the same mortgage approval process as someone with not excellent credit. I'm Rachel Saylor Brown. Thank you for watching and look forward to diving into this today. So I had this come up recently with a client, and I've had it come up a lot of times actually over the course of my career, that I've had people say, well, I have good credit, why are you requesting all these documents from me? And me, I'm sitting here going, well, you have good credit, we verified that, now we have to verify everything else you've told us. Now, if you have good credit, I'm not faulting you for thinking that your approval process should be lighter. Because back in 08, 07, the years leading up to it, a big type of loan or a big part of financing was called stated income or no document loans. So basically, and this is what I've heard, this is before my time, I've been in it 10 years, but I was talking with a colleague that basically if you applied for a mortgage and you had good credit and you told me that you were a teacher, I would then go to a website that was like income.com, put in that you were a teacher, and it would give me an average amount of income that I could use based on your credit score and based on the money you have. Well, if you remember, a couple things happened after 08 where those stated incomes or these loans that people were qualifying for were really above their means. Not that they thought they were getting into something above their head, but it was just a whole mess, right? We all know that. So we're in more of a strict mortgage world. I don't like to use the negative aspect of it, but we're very intentional on the lending side because of how we are now regulated by the Fed, right? So I want to give you a couple of tips to be mindful of, whether your credit is perfect or whether it could use some work, somewhere in between. We're going to talk about 3 things to be mindful of. So you've got your great credit score, you know that you're gonna have a high score when the lender pulls your credit. Things to be prepared for, number 1, is that they are going to ask for your income documents. Now that could be W-2s, pay stubs. If you're self-employed, that could mean tax returns. If you're commission-based, that could mean another thing. So just be prepared that your income is gonna be fully vetted in several different manners based on the documentation that you provide. Item number 2 to be prepared for are your bank statements. Now, on the lending side, we're going to need a copy of your everyday checking and savings account, right? So where your pay stubs go in, where you pay your normal bills. Typically, if you're like me, that's linked to a savings account as well. Now, what's important is that if you are using different money for your down payment, right? Let's say that you have a separate savings account, like a slush fund. This is the money I want to use for closing. You have to provide that too. Same thing if you're doing like liquidating a 401k or getting a gift. Just be transparent in where the money is coming. That's really what the lending side is looking for. We take no joy in going through your bank statements and going, oh my gosh, they spent $200 the other day. Like, we don't care, right? We want to make sure that your pay stubs are coming in, that there's no extra repeat bills coming out, and we want to see where the money for closing is coming from. Number 3 is the fun part. You've done your application, you've had your credit pull, you've provided all your documents. Now you can start looking for your home. This is where you can pick out the kitchen you want and the floors you want and the neighborhood you want. But you've done your due diligence and you've gotten past the pain in the neck stuff, so that once you do find a home and you have that accepted offer and you're in love and it's perfect for you, you don't have to then worry about now getting this information in, now things can possibly change. So number 3 is fun, go house hunting, you provided all your paperwork. So that's all I got for today. Keep your good credit. I know there was some crazy talk a couple months ago about lowering your credit score and getting a better interest rate. Do not listen to that noise. Good credit opens you up for so many different loan types and it gives you more choice. So thank you for listening today. Please be sure to like and subscribe, and I'll see you next time.